What's going on, everybody, and welcome back to another episode of FUD TV. Today we are going to be following up with one of my favorite crypto traders, probably the best crypto trader that I know of, certainly on YouTube at least, and his name is Crown from Crown's Crypto Cave. We're going to have his channel linked in the description below, and I just want to give you guys a slight warning. We had a great conversation, talked about a lot of things that I think are hyper relevant. You guys will seriously benefit from watching this interview, but I do want to warn you, it is quite bearish in the outlook. There's not a lot of moon this, moon that, though of course we do talk about potential future breakouts and their highs. It looks amazing as you extend the chart down 2-3 years out. But of course, over the next 2 or 3 months, we're going to be talking about some potentially shockingly bearish possibilities. And we also analyze some of your favorite altcoins. So get ready, because we're going to be taking all of Crown's decades of expertise here and applying them to some of your favorite altcoins, as well as the most important chart in the entire industry. So strap in. This is a very important episode of FUD TV, where we welcome back our good friend Crown from Crown's Crypto Cave. Welcome back to FUD TV, my good friend, Mr. Crown from Crown's Crypto Cave. How you doing?
Hey, what's up, Elliot? Thanks for having me back, man. It was a pleasure last time, and I'm very happy to be here once again, my friend.
Yeah. So a lot's been going on. Obviously, it's been about a month since we chatted. The market has more or less stayed in the same place, but obviously there's a lot going on a daily basis. If you haven't been to Crown's Crypto Cave, you got to check it out. Every day is a new adventure. Have you been doing a lot of trades in this market?
Yeah, man. Actually, recently, a lot of smaller trades. During these sorts of times, I don't see a huge need to put on directional trades. The big move was kind of already had from 6,000 down to 3,000 low. So right now, during these sorts of periods, I'll typically just trade very, very small time frames, keep my own positional sizing small, and perhaps later we can talk about what I'm essentially looking for the next bigger trade. But overall, this is what I do for a living. So just actually do some per day. I'll kind of force some out here and there. But I don't want to also misrepresent what actual trading is. And just sometimes you just want to play the video game.
Yeah, I totally understand that. I want to rewind, because you did say you do this for a living. And I think that is a very, very important distinction when you look for people, at least here on the internet, to follow. And you want to look for expertise. You want someone who's actually vocationally doing this, not someone who's selling a course and that's how they're living off of the world, and they're actually really just making money off of selling courses. You want someone who's making money off of the market. And so why don't you talk a little bit, again, if people missed our first conversation, talk a little bit about your history as a trader back in regulated markets, and then how long you've been doing Bitcoin.
Yeah, absolutely. Okay, so for people who are not familiar with me or where I come from, my name's Eric Crown. My beginnings as an actual trader came in the more professional world. I used to trade on the floor of New York Stock Exchange ARCA as a market maker into equity options, Series 56 and all that good stuff, which is a stark contrast from cryptocurrency land, because there's no actual verification process. Anyone can say that they're a blockchain expert, whatever that might mean. But in traditional land, there is that sort of governing factor. That whole experience put me around some of the best traders in the world. Being down there in ARCA, I essentially got to sit next to and learn directly from a guy who created a market making algorithm that a lot of professional traders actually use themselves. Then I kind of graduated onto another guy who became my main mentor for the next half decade or so. He himself had been trading for about 30 to 40 years, extremely successful, an independent guy, which is very, very rare, especially in the market making world. You can't truly be independent anymore, but he's kind of like the last Mohicans for there. And after then, left San Francisco and went on over to Chicago to trade on top of the Chicago Board of Options Exchange, SIBO. Probably heard of it, because that's one of the exchanges that offers futures right now for Bitcoin, I should say. And met a lot of great people there as well. Then a few years after that, heard about Bitcoin, started getting into Bitcoin, and it kind of just sucks you in, right? And you get more and more involved with it. There's a lot of advantages to switching over to full time with Bitcoin, and I decided for my lifestyle, it was time to kind of go with something that's more in line with it. Not only that, but in general, I like Bitcoin, and I think I actually do believe in it kind of long term.
Is there any asset anywhere in the world that gives you as much excitement or as much potential for gains as trading Bitcoin?
No.
And that's surely that's strictly the volatility, right? It's just the volatility that creates that.
This is a special thing, man. I mean, the rise in Bitcoin from basically the breakout of the last market cycle from around about 1,000-ish area to the high of the beginning of 2018 at around 20,000. That is unprecedented. That's the biggest, most crazy move bubble that anyone's ever seen ever in the history of ever. And you can go through all these sorts of things. They're documented. There's trading data all the way back down to 100 years ago, pretty accurately speaking, and then before that, obviously as well, but probably less reliable. Anyways, Bitcoin in general is there's just so much opportunity in this market. You see 5 to 10% moves almost daily in some cases. And if you're talking about altcoins, it just goes to infinity because these things are measured in X's, not percentages, which is absolutely crazy. Now, when you're talking about traditional markets, you can obviously trade options, which offer up, much more leverage. But then again, it's, it becomes a game, right? Yes, you can definitely do it on there, but margin requirements going to be a limiting factor. With Bitcoin, you can hop on an exchange like Deribit or BitMEX and do 100 times margin, which is unheard of. I mean, except for Forex, but again, Bitcoin is a special land, as far as I'm concerned.
So this is your chosen land, the special land, and just to reaffirm for everyone, that's there's no place like Bitcoin. What has been your
Bitcoin, man?
What has been your experience over the last couple of months? Obviously, in these bear market trends, it tends to be a little bit. At least in this bear market, I've gotten the impression from a lot of the traders that I talk to, and I follow you included, that this is one of the hardest times that you could trade any asset.
Yeah, absolutely, man. Bull market, you can be a professional trader, you could be someone who doesn't know too much and still make, both people are going to make pretty damn good money. I think most people experienced that last year, 2 years ago now, end of 2017. You didn't have to be a genius or spend years and years and years learning a skill to make money. Now in this sort of market, you do. Bear markets are very difficult because just because of the intensity and the erraticness of some of these moves, especially in Bitcoin land. So with increased level of opportunities also become increased levels of just insane risk at the same time, right? Because there is, in relation to traditional markets, not too much liquidity for the bigger accounts to move money around in Bitcoin land. You get these really, really violent moves sometimes, and getting on top of those can be difficult. Now, of course, when you're in an overall, downtrend, just like when you're in an overall uptrend, the name of the game is to be short. And I mean, that's been the play for the last year, and it's basically just been a waiting game essentially. But at the same point in time, it's, can you handle the upswings against your positions? And then also on top of that, man, this market's really been brutal in the way that it's been shaking people out. A lot of people never thought 6,000 was going to break. That was obviously not the case. So just figuring that whole thing out and essentially surviving through that and making money off that, that is where a professional trader actually has to work. And it's certainly possible. I hope that I've been able to show it on my own channel and verify my own trading, my own self. But I think you've seen a lot of people fall off the map recently. You see a lot of people on crypto Twitter, they're not there anymore. You see a lot of people on YouTube, if they don't show their trades, then they definitely don't now, that kind of thing as well. But overall, man, yeah, it's more difficult right now. It feels like you actually have to work and be very, very careful, because when those selling spurs do come, it rains, and it doesn't stop raining for a while.
So what would you say that you have been looking for if we were to give people who are maybe watching this who don't really understand trading on a technical level? What are you looking for? What gets you excited when you wake up and you see this type of formation, this type of pattern, this type of activity? What feeds into your narrative that you've been building, especially here in this bear market? We can talk about bull market strategies sort of as a different segment, but considering that, I think no one can confidently say, and no one with any kind of credibility can confidently say that we're out of this bear trend. What do you think is the thing to look for to get excited for a trade?
So to get excited for a trade while still in this bear market, okay, just to confirm, let's go over here and I'll bring up my, and yeah, all right. So in a bear market, basically the name of the game is the opposite of a bull market. I want to be on the side of the trend, so I'm looking for shorts, and I'm basically looking to short the next big, the next big swing high. Could we actually be viewing that being put in right here, right now at this 40-50 area? You can see that this is a nice rejection, a long wick to the upside off of this moving average right here. That's typically a good sign. As this, Bitcoin has actually been unable to get back above this area for the last, I mean, ever since 6,000 broke essentially.
So you're saying that just based on the chart, it's very unlikely that it will break that blue line, that aqua line, whatever.
This is what I like to say, man, is I like to say that my opinion is not necessary. I can have an opinion on the market, but it's not necessary to make money. And that's where true trading comes in. Here's what I can say, man. And this is what I get excited about. In the most basic of basic ways, you can just kind of mark off these last prior swing highs, and you'll know that there's going to likely be a lot of selling interest around those areas. That's essentially what it's telling you. Also, on top of that, this price action over here is very corrective in general. So this area right here, I got pretty excited about that. I actually just finished a stream on my own channel and took a short off of that. And does this trade end up being the next big trade where we come back down and retest these prior lows? Potentially could be. But again, when we're talking about trading, we're talking about statistical setups. So when I get excited for a trade, or what I'm looking for in a trade, maybe more accurately, it's probably not a good idea to get too excited here. But although it is fun, I'm looking. This is a potential major trade. This is another potential major trade. This is another potential major trade, and that's all you can really do with that. And the reason why these are great areas to be taking trades off of is because you're going to know very quickly if you're going to be wrong. So what you actually have to risk in order to find out if you're going to be essentially right is minimal. That's what creates a good trade. So this is what I wait for. And in a bear market, I'm essentially looking for these places to go short on. In a bull market, it would be the opposite, where I'm essentially marking off, prior swing lows and looking to take long trades off those. But essentially, this is the kind of things that I'm looking for in this sort of market right here. And I think that overall, and I'd hope that this translates pretty well, just basically to a newer trader that's looking at these swing highs, marking off of these sorts of areas of resistance are pretty intuitive, I feel like, or at least easy enough to grasp upon. You can see if we were to take out this area right over here, 45.50, you got another one right over here, in this kind of block. So you can mark off these areas, and it's not about being right on them. It's about managing your risk reward on them. So that's really what it comes down, and this is what I'm looking for.
So when you say that, so obviously if you're approaching this, area of resistance, one of these lines of resistance, what you're saying is you can know if it doesn't have success, or if it does have success in blasting through that resistance line relatively quickly. You know what, this isn't a short position. I'm just going to get out right now.
Exactly. So again, you got to think about, how does a casino think, right? How does a casino think? Because they know that they're not going to win every round of blackjack, for example. They're going to lose some, but over time, statistically speaking, they're going to be right. That's exactly what I'm doing right here. Is I know one of these guys is going to be a big trade. Assuming that the low is not in, which we can go over that later. I do not believe that the low is in, but I also think it's going to take a long time to actually get there, to be honest with you. So this is going to be one of those statements that not going to age too well for a little while, but give it a few months and we'll talk again. Most likely. But yeah, that's, you got one of the golden tickets on one of these levels, most likely. And even if you're wrong on all three of them, well, you've saved your account because you had good risk management skills. And if the trend were to actually change around to the upside, well, there you go. Now you can get long and you can get with the trend as well.
So give us a little understanding here of when you say you don't lose much. Like what would you say is your maximal exposure when you set up a trade like this? How much could you lose when you say, okay, it's gone the wrong way on me, I've said it was going to go short, it's continued to rise in price? How much would you say you would lose, if you had, give us a little bit of an idea of what that risk management looks like?
Right. Got it. Okay. So this is a highly personal thing, which I can certainly share my perspective on this. It's going to be different for different people, though. The way that I like to do it, though, is I got short right at about 40, 50, 40, 60 right over here. I actually put on an active position I guess can show that really quick as I do still have it on. This guy, actually, I did close most of that, huh? Yeah, I closed most of that. I'm still short from 63, but basically, I'm cool with this because if I take a position at 40-60ish area, I only have to wait about $40 till it gets above this area right here to tell me, okay, this trade is not going to work out. Get out and take your loss. So $40, you can certainly make that back. In fact, I would argue that you can make that back pretty. You see a $40 swing in Bitcoin all the time. It's
Yep.
not that much money. And here's the key point: is that when you're trading for potentially to the next major support level that we have right over here, all the way down to about 3,900, you're trading for about $150 right there. You can afford to risk $40 because really you're going for a better than 3-to-1 risk to reward ratio right there. So over time, if you can find those sorts of setups, you're actually going to be successful just by a statistical narrative. Again, the trend is still very much down. So the trend is your friend until the end of the trend.
So speaking of that, and I really like the way you laid that out there. You show that you're above a line of resistance there, and then you're looking to see if it goes through yet another line of resistance before saying, okay, I need to get out of this. But then you also say, statistically, it's more likely that it'll go down the other way, and I'll have this $150 spread versus the $40 spread that I'm risking. And so I think that's a good way for people to visualize it, is when you have another point of confirmation that is much smaller in spread value, in price difference than your potential target, whether that's long or short. That's a good setup. I think that's an interesting.
Absolutely.
It's a great point for people who are maybe new to trading or just curious. So I want to rewind just ever so slightly, because this is, of course, the great obsession of everyone in cryptocurrency and Bitcoin right now, which is, what makes you so confident that the trend is still going down?
What makes me confident that the trend is down? Okay, so let's actually run through a few things here. I'm going to bring up this chart on Bitstamp. This one has more price action history, so it'll be more useful for our purposes right now. Anyways, the volume characteristics on this are very corrective as it stands. You see falling volume as this thing tries to dig out of this kind of area right over here. So to me, that is typically indicative of more correction. Correction leads to the former trend taking over more often than not. Now, what else can we kind of judge upon this? Well, overall, when we're talking about big market cycles, when we're talking about big areas being taken out or taken down, let me put this on log scale and let me put on the 200 simple. What you really want to see is a few specific things, and I'll bring it up right here. So basically, when we're talking about major market lows being put in, you want to see massive volume being done on the actual low. When you look at this guy right over here, this is not very much in relation to your parabolic cycle over here, which out of context, it doesn't make too much sense. But let me show you a good example of what this typically looks like. And you have a great example in the 2014-2015 market cycle right over here. We have a massive spike in volume confluent with what you did in your more parabolic cycle right over here. In the current stature of this guy, you have this nice spike up, which does look impressive on its own. But to me, this looks a lot more similar to what you did right over here after this nice drop down. I mean, just check this out on this drop where everyone thought the low was, I don't know if you were around during this time, but everyone thought the low was in right here on October 2014. This was a 51.5% drawdown from that last kind of breakdown point. Very similar to what you see right over here. You take this down, what is that? 51.5%. Again, it's just, I wouldn't put too much weight on these percentages, but it's just funny that it does kind of work out that well.
Eerily similar.
Yeah, it is certainly eerily similar. Also, so that sort of thing kind of lines up. Also, the bounce off this area, very lackluster as well. When you put in a major market low, you really want to be, sorry, that's actually, let's go body to body. Yeah, about 23%. When you're talking about major market lows, you want to have a pretty massive bounce back up relatively immediately. Right now, we have about a 25%, up from there, similar to what you did right over here. Just kind of oscillating between these two major moving averages. So to me, that's also a very suspect thing as well. To put this into context, you have a couple examples of what capitulation can look like. Now, First things first, as far as actual time spent at the low, markets are not this generous where they give you, and keep in mind, each and every one of these candlesticks is 1 day long. You have 1, 2, 3, 4 days spent at the low, essentially within about what is it? Almost less than 2% of the low. A great example is actually not too long ago, right over here. In 1 day, this is 1 day of price action. Bitcoin bounced up 42% from open to close. Remember, that's more than Bitcoin's done in 4 weeks on this current bounce off the lows right now. You also had an example right over here of what capitulation can look like. Obviously, this was not the low, but another 40% day. I mean, Bitcoin went down $5,000 in the state, by the way. It's insane. And then if we go over here to 2014, similar as well. Now, it's good to be comparing Bitcoin versus Bitcoin. Yeah, another 41.5% move. It's good to compare Bitcoin to Bitcoin when looking at percentages. While traditional markets do have the same sort of overall market feeling and overall, emotional response to these sorts of market cycles, the percentages are going to be different because they're just operating on a different level. That's one of the reasons why Bitcoin has so much opportunity right now. So
yeah, the speculative overpricing or underpricing is not as extreme as in Bitcoin.
100%. Now, this fourth and final thing that I'm going to show you is something I think that's lesser spoken on, but basically.
And obviously, before you finish, the volume changes when you don't even have as much volume, and you're talking about when Bitcoin is now a fraction of the price it was. The actual US dollar volume is minuscule when compared to the last.
And let's actually give that some more light. So when we're measuring this volume against this over here, remember these volume metrics down around here are measured in coins traded, not dollars traded. So when Bitcoin is $4,000 versus on average $10,000 over here or higher, volume still higher, that is not good. So let's actually look at it versus the dollar, because we can actually do this. If you want this indicator, it's this one right here. We'll bring it up right now. And you can see very easily, very quickly, is this anywhere near this right over here? No, nowhere near, man. So when people just look at that and read like a few blurbs from Investopedia, I think it gets really lost in the actual art of the technical analysis of what this really means. People want to just overlay the market cycle cheat sheet over everything and then just call it done. Well, people have been doing that for the last year because it's in fractal nature, and at one point it will work, but it's going to be deceiving in the way that actually works out. Anyways, the fourth and final thing is right over here. Let's see if I can bring this guy up. Yeah, here we go. This is historical volatility rank. So this is something a little bit lesser spoken on. But very important, and something that I used a lot more in traditional markets. So I'm going to put this on the BLX index. This is the longest running exchange, or it's not exchange, but it's the longest running index for Bitcoin prices. And the idea with volatility is that when volatility reaches a maximum, major market highs and major market lows are put in place. So it oscillates between 0 and 1, 1 being the highest, 0 being the lowest. And what volatility is also essentially telling you, I can give you the mathematical equation for it. That's probably not going to be too applicable. What's more readily digested is higher volatility equates to more potential gains based off of basically a standard deviation workaround from the last sort of trading periods. Again, that doesn't make too much sense, but let's just look how it acts right around here. So on the low of 3,000 over here, we got up pretty damn high, right? All the way up to about 0.69, great number. Now that sounds great out of context, but remember this also is between 0 and 1. So while that is pretty damn big, and that does suggest that you actually do have a pretty nice move to be made and gains to be made to the upside, which you certainly have so far. Don't get me wrong, $1,000 moves to the upside is phenomenal.
Especially off a $3,000 low, that's a 30% move, 30% move.
Yeah, man, and that's the magic of Bitcoin right now too. Look at this guy right over here. This is your 6,000 low. Again, when we looked at actual capitulation, where's your historical volatility rank getting to? All the way up around here, around the 1 mark. I mean, quite literally around at 1 right over here. This is your ultimate. This is your ultimate high right over here. Again, going all the way to 1. Again, calling the tops. and calling this bottom right over here, calling a nice major low right over here before the 2,000 to 20,000 move. I mean, this is just insanity, man.
And for people who might want to be tracking on your chart, it's the bottom-most indicator that you have highlighted there. Yeah. So I guess I want to just rewind for a second here and go back to the $6,000 moment where we broke 6,000. I know that was a trade that you had been looking forward to, like it was Christmas morning or your first trip to Disneyland. And I'm sorry, I don't want to break any hearts here, but it's why is that not capitulation? I've gotten a lot of let's just say respectful disagreements, not so respectful, but disagreements with when I echo the idea. And by the way, guys, I'm following, you know, and sometimes summarizing people like Crown, who I respect and I know is actually qualified to make these kinds of chart analyses. But why is this not capitulation? Why is this $6,000 breakdown to $3,000? Why is that not capitulation?
Right. So, I mean, as we kind of just said before, it really comes back down to what capitulation typically looks like. There's three big things to be looking at. And the big ones that really set me off about this guy, as stated before, are just the amount of time spent at the actual low. Whoops, let me get this guy off. The amount of time spent at the actual low right over here, around 4 days at the low. Markets are not this generous. That is insanity. Markets give you about an hour to buy within 5 to 10% of the low, as we saw also with the percentage gain on that. And also the volume done on that area is just not consistent with the way that Bitcoin has showed in the past that it puts its own lows in, which again, very similar to other markets. The percentage, the percentages will be different, obviously. But in terms of Bitcoin, it still does not add up. So I would say, if you are looking for this the ultimate low, I'd say it's less likely that it is the ultimate low. We can also bring up over here, let's see, the MBT signal. For all my bad search history is going to come up. This guy over here, although this could be discredited, although it has been working in the past. It's called every market top and every market bottom in Bitcoin's history perfectly. Every time that it reaches a topping phase where my curse currently is or higher, it will go back to this level and call the low below where my curse currently is now. As you can see, this thing is just like right smack dab in the middle at the 100 level. You'll notice also, remember, going off of this area right over here and making the relation between this kind of stutter step right over here and this kind of stutter step right over here before the actual low is put in. You'll actually notice if we look at the chart right over here, you'll see a very similar workaround in this. This was a drop down right over here. You can see
it drops right below 100
for a second. Yeah, and then comes back and levels out the same area.
Wow.
Same thing as what you're doing right over here. Yeah, man. So again, I understand, man. Believe me, I want Bitcoin to be bullish too. My life gets easier, as I said before. Trading in a bull market, you don't need to be a professional. You don't. It's to tell it straight up. Yeah, you'll probably make a few more bucks, but is it even worth the time spent and resources spent to do that? Probably not. At least probably not for most people. So I want Bitcoin to be as bullish as the next person, but here's the thing, man. There's three things that I think you could also just very easily say as well. If you want like kind of the more easy to digest way, you could say, all right, daily chart right over here. We've been in a downtrend for over a year. Nothing's changed there. The trend is your friend until the end of the trend. All right, so that's strike one. But that would be the easiest one to change around, but it wouldn't necessarily change around the picture. The next one will actually change some things around that I'll show you. As long as the weekly is below this 200 exponential moving average right here, this purple moving average, there's no reason to be bullish at all. Mm-hmm. Nothing. Again, when we're talking about trading and we're talking about analysis, we need to see proof. That's where you actually get those statistics on your side. It doesn't mean that Bitcoin can't prove itself above that area. It certainly can. If it can open and close a weekly above this area, I'd drastically change my tune, and I'd be happy to. That is a part of trading, to know when you're going to be wrong. That is so important. And then the third and final piece would be back above 6,000. Now, I think it'd be reasonable to claim that you'd probably know beforehand, especially with the weekly taking out this level. That would certainly be of great interest. But as it stands right now, man, I mean, even just looking at this chart right now, you're still just basically filling out this area right here now, aren't you? It's I actually thought that Bitcoin was probably going to get a little bit higher than this, but overall, just filling out this area right here, just making lower highs, man. It doesn't need to be any more complicated than that. But again, I'm not saying that Bitcoin can't actually reverse a trend. It's just I need to see proof before I actually put money to work. I'd be very interested to hear why people think that the low is in, what they're essentially going off of. But as far as markets that I've traded, as far as across any different trading asset, whether it's forex, whether it's commodities, whether it's equity options, which is where I come from, or magic internet money, the market cycles are very, very similar because we're all dealing with the same sort of psychology. Remember, we're all humans trading these things. Even if it's a bot, it's still a bot programmed by who? A human. Humans have not changed cognitively speaking ever since we became anatomically modern Homo sapiens, which was hundreds of thousands of years ago. We're battling conditioning that is just everyone's dealing with, and it's primordial. You can't get away from it unless you're like some sort of a monk, meditating in a cave in Tibet. But that person's probably not interested in trading magic net money to begin with.
Or a billionaire with just so many bullets in the chamber that you don't care about taking another $100 million bet on Bitcoin. Yeah, that's
exactly. And
or a monk, right? Michael Novogratz or a monk, right. Whichever one.
Right. And so, the reason why you get that's the reason why you get a lot of the same sort of market cycles. We're dealing with the same sort of emotions. We're not necessarily looking at a chart of Bitcoin here. We are looking at a chart of Bitcoin. We're looking at a chart of human psychology with regards to Bitcoin and market movers, and just the way that we're programmed emotionally to begin with create these very similar market cycles, again, across any sort of trading asset. We can go look over here and we can go look at GLD, something that, or actually it's a trade GLD, but we'll look at the real gold right over here. And you'll notice something very similar, man. Very, very similar. This thing, I traded this thing when it was going parabolic. What was it, like 10 years? 10 years ago? No, this was in 2010. So yeah, not.
It's 2011, I think, was when the big correction happened in 2011.
Yeah. So you'll notice a very similar thing over here as well. Although this had not been, we don't have as much trading data for this, but basically a parabolic move up goes into your blow off top phase, come down, has a low been put on this one. That's a good question. Yeah, I could go both ways on this one. If U.S. market starts crashing, that's going to make this thing a lot interesting, because this one actually does inversely correlate with the U.S. markets, which I believe will go lower as well. Although same thing as Bitcoin, not necessarily right now. I think it's going to spend some time going sideways, maybe even going a little bit more up, and then sometime later this year.
So yeah, let's talk a little bit about future predictions, and then I also want to ask you to dive in and hopefully get maybe ask you to do a little bit of an analysis on some altcoins, because that's always fun, and I'd love to know what you think about some altcoin charts, because Bitcoin charts fun and all, but there's actually quite a bit of movement now. There's a couple coins not necessarily breaking away from Bitcoin, but having their own legs and putting them to the test, and I'm curious what you think about their charts.
Cool, man. Yeah. All right. So what do you want to start with?
Let's start with Bitcoin, your outlook for the next sort of, obviously we've touched on it quite a bit, but let's finish this. What is your outlook for 2019 on Bitcoin? What are you looking for big indicators? I know you said 6K is a huge number for you, but at which point, I'm sure that we'll bring you on to cover it once it happens, but at which point are you looking for that capitulation, and how low do you think this is going to go?
All right, so there's a couple of big areas of interest for me. I'm not going to be like other analysts out there that you might or might not know of. I will never say that Bitcoin is definitely going to a certain area. I take it one step at a time. Remember, it's always a risk-reward game, and you can't trade your opinion on this. So if and when 3,200 breaks, the next big area that I see is this guy right over here at around 2,300 to 2,600. I think that this area has a extremely strong chance to bounce this, pretty damn well. By the same token, do I think it can reverse it? It's certainly going to have a good go at it. Volume profile over here showing a massive spike. You also got the 886 Fibonacci retracement, which is actually where you did bottom out in 2014, just by the way. Some good historical horizontal levels right over here, and overall a lot of things pointing in this direction from a higher time frame concept as well. Monthly major moving average coming in right over here, the 89,200 as well. If that area does break, then there are two more areas that I have in mind, and then after that it is doom and gloom. After that, I don't think it's going to happen. I think if this area were to break right over here, I think 1850 has a very, very strong chance to reverse it. But you got to take it one step at a time. You got to wait until the price action tells you that that last 2300 support failed. And I don't see too many people talking about this 1850 area, so it does make me think that it's actually quite a possibility, because you got the super bears on one side that are looking down around here around 1100 1300, which, yeah, it is a possibility. You got the 942 fib around here. Also, just an unspoken rule is that the former highs of your prior market cycle become the new lows of your next market cycle. So it could make sense. But because the perma bears are looking down around here, it'd be a classic signal to front run them by hitting this level over here. Again, making the assumption that this level, this blue box over here, fails. Now, of course, if this area does fail,
it's also a rule that the market never gives you what you want.
Yeah. Yeah, exactly, man. Exactly. And here's the thing, man. And I want to speak directly to the people who are naysayers of technical analysis right now and say, you know what? You can do all the technical analysis you want right now, and you can still be severely wrong, because what happens when a major market low is put in, what actually happens, it's not because there was a special level or your special secret sauce indicator told you that it was going to happen right over here. It's for one reason and one reason alone. It's because someone with extremely deep pockets, someone with unfathomably deep pockets, whether it's just some random Russian billionaire messing around, or it's a massive firm with a massive role as well. They will come in and they will buy up at that level, and they will probably not do it at the level that everyone thinks is going to happen at, because they want to get as much as possible. Those people need to engineer liquidities for themselves, because you can't just get if you put in $1 million market order even on BitMEX, which has the best liquidity right now, you're going to still move the markets like 10, $20. If you do a $10 million market order, you're going to move it like $50. It's going to be crazy, man. So just imagine trying to get in 100 million, 200 million, 500 million, maybe even $1 billion, stuff like that. Those people need.
All right, everyone, imagine putting in $100 million Bitcoin order right now. That's what everyone needs to do. That's your homework for today. Imagine putting in that order.
And it's one of those naive things, man, because people, for whatever reason, think that retailers run this space. That is not the case, and I can tell you that directly from experience. I have friends who are co-founders of not even huge firms, quant firms that do market making in all the same stuff that you see here, whether it's BitMEX, Bitfinex, even Binance, as crazy as it sounds.
Of course.
And they are managing. What's up?
Of course. Yeah.
Yeah.
Why not Binance?
And they are managing, massive roles. And this is what they tell me. So, those people do move the markets. It's not someone with like $1,000 or even $100,000 or even $1 million. It's someone with, $500 million, maybe. That's who you're dealing with. So when you're talking about market movers, man, they really need to engineer liquidity for themselves. So that's why you get those crazy price action. That's why I would agree with someone who says, Crown, how is one of those fancy lines going to tell you where the bottom is? Well, yeah, I agree. It's just kind of giving us a guideline. Now over here, I actually can come up with a potential technical analysis way. I don't like doing this, but I'll do it for this video. But just understand that this is something that I don't make decisions based off myself. It is quite interesting to look at, but I would not be going off this myself. And basically, each and every one of these dotted lines represents a major support trend line of a parabolic market cycle throughout Bitcoin's history. You have this first one in 2010, 2011. It gets broken in the 2012 market cycle right over here. That becomes the governing factor in your highs of your 2013 and 2014 market cycle right over here. Then you create a new support trend line for that market cycle going right over here, right over here. It gets broken in 2015. That becomes the governing factor in your 2017, 2018 market cycle right over here, the one that we just played out. Now we created another support trend line for this past for this area right over here, governing supporting the price action all the way up over here. But you notice that we did break this on the drop below 4,000. So does that become our governing factor going forwards here? Well, 2 times does not make a trend, to be fair. But it is interesting to look at.
Well, it certainly goes hand in hand with that sort of curved version, the logarithmic sort of curved version of what people use to predict sort of the pace of Bitcoin's growth. And that's sort of the argument that Bitcoin's growth, like I'm trying to make this in the mirrored camera, will level out, out, and essentially stabilize. It's interesting to see that kind of progressive, I guess. This would now be the high. If you see a parabolic cycle in the future and we start approaching this fancy dotted line, it's potentially a decisive moment.
Right. Exactly. So That's a really good way of relating it, and you do see that it gets a less degree each and every time.
Mm-hmm.
So as time goes on, it would suggest that the big up moves become less and less between each market cycle. But then again, that is a relative term. I mean,
Mm-hmm.
we can zoom this guy out to 2020 over here, and you tell me if this is. I mean, you tell me if this is low. And this is one of the reasons why I am a believer in Bitcoin. You have a potential governing factor over here at 90,000. I mean, I think that's pretty damn good. That
You're in
again,
22 right now. You're in July of 22.
yeah, that would be 2022. But also understand that at 2020, right over here, it's actually it's only, well, Jesus Christ, man, 2020 is all the way over here. It's only 13,500. So
Mm-hmm.
if I had to say something, I'd also say outlook for this year. Understand that this is likely going to take a long time.
Yep.
While I don't believe Bitcoin's done putting in the lows, and even once Bitcoin does put in the lows, you typically get an accumulation phase, something like this. So there's no real rush from my end.
Mm-hmm.
And this in 2014, 2015 took about a year long to accumulate. And the market cycle already in 2018 is longer just by day valuation. So you can see the same things in a bunch of different assets. I don't know if you want to go through that or if you want to go into altcoins now, but that's
so with this particular chart, you're going to be looking for a capitulation move, and then from there, you're going to be looking at an accumulation phase. So that's why you're saying there's no rush, because you don't need to catch the bottom here. You can hover around the bottom for quite some time.
Yeah. Now I say that, and I'm going to go even one step further, and this is like full on into the woo-woo jar. The technical analysis is bogus jar, but I'll do it. It is kind of fun to look at, man. So you see this ascending trend line right over here. This is the first trend line kind of holding in this consolidation phase after the blow off top, and then leading into your bull trap over here, which was stopped by this guy, the same one, just basically going from your ultimate high, and then governing this guy down. You'll notice that you actually do put your lows in on this first one. And once you break out of it, it does become your support all the way down to your ultimate lows. And then once you break out of this second one over here, that's actually when your bull market does begin. And that was the first. That was the first preliminary signal really for it. I mean, if you would have longed on the break of this, you would have longed literally at $269.
Wow.
So not bad at all.
100x.
If we Right. Yeah, there you go. 100x, not bad. If you were to do the same thing over here on our 2018 market cycle, we got the same sort of trend lines, right? You have your bull trap right over here. So this is your first consolidation area. We have based already once off this guy right over here. Looks familiar, huh? Well, where's your next level coming in around? Well, you could maybe say, if you follow this area, again, how much weight do I put on this? I'm not making decisions based off this, but it is fun to look at. This area will be coming in, mid-February. So maybe is that a potential low area? That would line up with the 2300 up level. If you'd go all the way down to 1800, that could maybe line up with April. Again, I'm not saying that it's going to go down there, but just interesting. And when you actually do break out of this level right over here, well, maybe it does spend some time accumulating this phase right over here, and then you break out of 3000, and this would have a date on the 15th of middle of July. So it's going to take some time, man. That's kind of what I'm saying. I wouldn't live and die by these numbers, but just interesting to look at, man. That's all.
Well, thank you for taking us into the woo-woo jar. I don't think I've ever heard that expression before. Very interesting stuff. Obviously, it's good to know, and just to reaffirm, if whatever you care to share, I suggest everyone go check out Crown's channel, as he really does share exactly what he's doing. You can see how much Bitcoin he puts on his trades. It's not an insignificant amount. I would say that I've seen you have what I think most people would consider a phenomenally successful 2018 in cryptocurrency, and I don't think many people can say that. So I highly suggest checking out Crown, because if you're making money in the bear market like this, you are truly one of the few. And so definitely check that out. Speaking of which, let's check out a couple of altcoin charts that I think people will be interested in. And, I guess the first question is do you see anything different than Bitcoin? And then the second question is, of course, what exactly do you see on these charts? And the first chart that I would like to check out is XRP. Or actually Ethereum. Sorry, let's do Ethereum first.
Okay, Ethereum. Yeah, let's go give him a look over here on Finex.
And what's your nickname for Ethereum again?
Mr. Buterol.
Mr. Buterol. Mr. Buterol. So good to see you.
Okay, so Yeah, how good to see you. That's exactly right. So yeah, Mr. Beaterall looks in pretty damn similar actually. If we put this on linear though, it looks what it really should look like. In fact, just as an aside, on anything other than Bitcoin, I actually look at linear, or sorry, anything other than crypto, I look at linear scale. This is because cryptocurrencies operate in X's, you got to look at logarithmic scale, otherwise it doesn't make sense.
Okay.
Um, do I see anything different on this? You are having a better reaction right now. Is this is a much better reaction right now. Alongside Litecoin and a couple others coming off these lows, this would be a big counterpoint to what I have to say about Bitcoin. Then again, could we actually be seeing the initial etchings of bifurcation of the market where we have things doing something different other than Bitcoin for a sustained period of time? Perhaps we haven't seen it just yet. Doesn't mean it can't happen. In fact, I think it's going to happen at some point. But the problem for Mr. Beaterall is that as far as a weekly goes, as long as you're below this $210 region right over here, it's still just another lower high. It's still a downtrend. Yes, you do have good volume coming off the low, but again, looking at the dollar valuation, it's gonna reveal this quite quickly that it might not be what you're looking for. Again, people are looking at this down around here and saying this is that's crazy volume, Crown. Well, that's related to when Buterol was over $1,000 right over here. It's nowhere near. So again, I'd be very careful of this. This is also event driven right now with a couple of forks coming up. Although one of those forks is a reduction in the block having or the block reward, so that is actually a legitimate fundamental catalyst. So this one's more of a wild card in my opinion. There are things that look different than Bitcoin, but for the most part, if Bitcoin still is not put in lows, I would not go with the assumption that other things are put in lows until they prove it. So Buterol will prove it to me above this area right over here, 210-ish on Bitfinex.
Okay. So if you're looking for a bullish sign for Ethereum, look for it to break above that prior high and establish a new higher high.
That would be absolutely huge.
So that's like the equivalent of like the Bitcoin 6,000 number.
Exactly. Yeah, exactly.
Awesome. So yeah, we'll have to see what happens with Constantinople. Very interesting stuff. Obviously, Ethereum has been, absolutely dragged over the last few months. And, I personally, I know on the channel, it might seem like I'm extremely bearish on Ethereum. That's just because I want you guys to hear the hard truth. And I don't want you guys rushing in and spending all your money on something that's going to go and drop again. But at the same time, I do hope that they get it together because I think they are quite an important part of our ecosystem. So
I'll put it this way with Mr. Buterol, your claim, your thoughts are not unfounded. This is as far as dark pools go, as far as OTC orders go, there's the most sell interest in this thing. I'll put it that way.
People are trying to get out.
Exactly, and these are the market movers, people with big size.
So yeah, be careful of Ethereum. I'm happy that Ethereum's going up. I had mentioned that it could go down as low as $50 or $20 on previous episodes, and people called me crazy. I don't want to be called crazy. I also don't want to give you guys the impression that I'm not worried about that. I am genuinely worried about Ethereum going well under $100. What do you think about that as potential?
Yeah, so that would be assuming that this is just another bull trap over here. I would say that this looks better than Bitcoin as it stands, but again, falling volume as you kind of chug along this area. This is your first major resistance right around the 100 exponential. It's also just kind of your swing low from right over here, finding some nice resistance, 618 fib, classic stuff. Putting in a topping formation also on your lower time frames, oscillators switching around. With your event coming up, and event mentality very similar, typically speaking. People are going to hate what I'm about to say, but it's the truth, man. This is what I've seen across all the different assets. Again, doesn't matter if it's managing net money or insert random stock here or gold or whatever it might be, but when it comes down to events, you get event psychology. Again, going back to the emotions of the market, the bigger accounts, the market movers, the guys with a lot of with deep pockets, they will buy up in anticipation of these sorts of events because they know that they can generate interest, generate that great fear of missing out, right? Mm-hmm. And now they have buyers. Now they have buyers to actually sell into. Remember, if you are trying to move around hundreds of millions of dollars, you can't just sell at market value. You're going to destroy the market here. You can't be done.
Correct.
It can't be done. So you have to. So this is why I say I'm not saying that Ethereum can't get back over to bullish. It can, but it's got to prove itself first. That is what I really want to get across as a trader, as a trader. More importantly than an analyst, it has to prove itself first. Once it does that, hey, I'm all aboard the Ethereum train as well. Maybe you got a better position than me, but over time, I'd rather be safe than sorry. That's all I'm saying.
Risk management, that's a continuous theme of everything you seem to you try to teach, and I think that's something that everyone needs to understand is you are not buying and you are not shorting, you're managing risk when you are trading.
Absolutely, man. We're not traders, man. We're risk managers. That's what separates people from being successful and being wrecked. You're not going to last very long if you don't, because you will be wrong at some point in time. That's also what I'm trying to convey as well, is that you can't be right all the time. All we can do is come up with good statistical probabilities. What if, if I just decide to short this area right over here, but I don't have an area that I'm going to get out at? It can't be done. You're statistically speaking, you're setting yourself up to be like quite literally, you will be a failure just by the way statistics go. It's just a matter of time at that point.
All right, let's move on to XRP. I want to cover not too lengthy, but I want to check out a couple big charts that I know people care about, and I want to make sure people are getting a good educated sort of analysis on these charts. XRP is obviously one of the most popular, most talked about, most beloved sort of altcoins, most controversial altcoins as well. What do you see in this chart? Look into your crystal ball and tell us what this chart says, Crown.
Okay, so XRP is interesting, man. There's a couple things that stand out. First things first, it survived through a past prior bear market, so it actually does have a proverbial base to go back to if things were to get really, really bad. The bad news is that is around like 6 or 7 cents. So take that as you will.
It's 6 or 7 tenths of a cent.
6 cents.
Okay. 6 cents. Okay.
Yeah.
I thought it was fraction of a cent.
So that is the interesting thing about it. And now Ripple is kind of its own thing. I don't really pay too much attention to technical analysis on it. It does pay attention to the higher levels, and it does pay attention to these exponentials. We did just get a 3-day death cross. If you are wondering what the implications of that is, that was what sent Bitcoin down. But right over here, as long as you're below 37.5 cents, this to me is not good. Again, going off of statistical setups, it doesn't mean that it can't get back above this area. It certainly can, but as long as it's below this area, 37.5 cents, I play it to the downside. I don't play any altcoins, to be clear. But overall, you do see, and I do want to speak some good stuff about Ripple right now. You do see something different going on in Ripple. Ripple is maintaining its gains better relative to other things. So I'm sure that we're going to do compare and contrast with some of the other altcoins, but one of the things that stands out is, again, it's not going to look as good on a linear chart. Actually, in fact, it looks pretty bad on a linear chart, but logarithmic. We'll just squint our eyes and make an excuse for it. But hey, you aren't pumping all the way up and then dumping literally all the way back down like you see most things in this market too. So that's what I can say about it. As long as you're, above 28 cents, you can make the argument that maybe it's just consolidating this region. Ripple does some weird things overall. And I don't pay too much attention to technical analysis on it, but you see a very obvious support trend line right around here, 28 cents. So you can make the argument for it, but I'd say that you got more bad than good on this guy. And that's what I need to see in order to get a little bit more bullish on this guy, at least above 37.5 cents. And then I shouldn't say full bull, but I'd be a lot more optimistic above 45 cents.
Okay, awesome. Let's check out EOS. I really want to check out some of these platforms. Cardano, ADA probably is more even important than EOS because it's just dropped so low, Cardano. And then EOS, obviously, I know we just have a lot of EOS community members that follow the channel, so I want to give them a little bit of time in the light. Guys, EOS fam, I love you. I'm sorry. I'm sorry about everything.
Okay. So EOS over here, I know that they have some fundamental BS, as we'll say. What's his name? Laramere, Dan Laramere. Do you know his name?
Laramere,
whatever.
Yeah, something like that.
The project. It's like, come on, man. You raised what was it, $3 billion or something like that?
Well, from what I understand, he's got it's conflicting. Nobody understands what's going on with Dan Larimer. But yeah, of course, he's the biggest negative about Dan Larimer is the idea that he leaves projects. I still don't think he's off of. He seems to indicate, from what I understand, that he's got a sub project within EOS or whatever, or on top of or aside of. It's like a privacy coin that he's developing on EOS. But yeah, I don't think he's leaving EOS. But yeah, I there was definitely that FUD, I guess, that came out.
Interesting. Okay, so EOS right over here. Again, similar to Mr. Buterol, could make a better case for the bottom than Bitcoin right over here, but same thing as well. It needs to prove itself first. As long as you're below, especially $3, very bad. If you can get above $3, then perhaps you do get to test this area at $4.50. That's the 6,000 equivalent to Bitcoin. If you can get back above that area, then yeah, it's all nice and clear skies ahead. But got to prove itself first. You'll see a lot of this stuff go down. You'll see a lot of this stuff have a nice big drop. Everyone thinks the low is in. Then you pump back up, and your first resistance just gets obliterated, meaning the sellers pile back in. Because remember, when you drop, I mean, look at this, man. This dropped 69%, man. 69% in the span of like a week, it looks like, or a couple weeks. You can't sell anymore because there's just no more buyers to sell into. So you need to create that illusion of a bottom potentially being put in. Now, again, I'm not saying that I could make a better case for this being the bottom than Bitcoin actually, but for this one to prove itself to me, it needs to really get back above $4.50, and obviously more concretely right around here $3-ish area. And we can talk a little bit more about that, but it needs to prove itself. Again, it's a down. There's no uptrend. There's no uptrend.
No uptrend.
There's no uptrend. Yes, the trend is your friend until the end of the trend. Again, when the trend has been down for about a year, I think it's safe to say, I'm going to go with that until it tells me otherwise. Doesn't mean it can't change around again, because I know people are really not going to like what I have to say, but.
Well, let's get really dirty here. There's two platforms, Neo and ADA and Cardano. ADA. Let's check out ADA Cardano, because Cardano had an astronomical run earlier as well, and now it's sitting at what I think many would consider to be an astronomically low valuation for Cardano.
It's low, man. It can't go lower.
It can't go lower. It can't go lower, can it?
All right. So here, this is the worst chart we've looked at. If you see something that literally just dumps, it's not good. It's not good. Okay, there's nothing bullish about this at all whatsoever. Now, I understand that this is going to be starkly different, a stark contrast to the Bitcoin pairing. Maybe the Bitcoin pairing, bottoms out beforehand. The Bitcoin pairing actually looks a lot better, although still needs to prove itself above this area right here, above essentially 1250-ish area. But now you're just charting two depreciating assets against each other. So it's like, which one's doing worse, essentially? I guess Bitcoin a little bit right now.
But it is relevant, right? The Bitcoin comparative. Yeah. It is relevant to understanding all coins.
Oh, 100%, man. And, I understand people have different perspectives than me. For myself, I still operate in US dollar terms. That's how I live my life. I do accumulate Bitcoin as well. But for the most part, dollar valuation is what I'm more concerned with, especially when both things are in a downtrend. When things are in an uptrend, then absolutely measured against Bitcoin, that will be the tell if you're doing, better than the market, essentially better than just holding Bitcoin. But as far as the dollar chart goes, disgusting. As far as the Bitcoin chart goes, might actually break out above here. But the 6,000 equivalent for Cardano is going to be 1340-ish area. If you can get above there, you might be able to start the party. But
it looks like it's relatively closer to that party starting than other coins.
Yeah, it is closer, and this is a pretty good move over here. But already. Did we just start a new 3-day? When is this guy ending? The 10th. Yes, we got 2 more days. You're gonna know a lot. You're gonna know a lot better. By tomorrow at close. This guy needs to. You don't want it to end it like this. I'll put it that way. But overall, better than most, especially against Bitcoin. Nasty rejection right here so far. I'd be careful with this. I'd still be careful with it.
Mm-hmm.
So yeah, again, the key point is needs to prove itself. Still not necessarily in an uptrend. Needs to get above this level, essentially right over here, 1250. But yeah, you're right. It is closer. It's right. It's knocking on the door. It even gave it a test yesterday, but that was rejected, is what this guy shows.
Right. All right. Well, last altcoin of the day. Let's check out Neo, and only because again, like I'm picking coins that have been handed a rough couple of months. Not that any coin has had a great couple of
Yeah.
months, but
Neo is a dog. So I know that I remember when this thing was ant shares trading below $1. Again, looking at it on the linear scale, you pump all the way up and you dump all the way. There's no if you see this on anything, doesn't matter if it's an altcoin, if it's Bitcoin, if it's a stock. If you pump all the way back, if you pump all the way up and then dump literally all the way back down below where you started the pump from, it's not good. Doesn't mean you can't pump again, but that is a pump and dump by the definition of it. People are going to hate that statement. I completely understand. I'm just sharing my opinion, man. This is it's just
all
what
right.
I've noticed.
Well, unofficial pump and dump, Neo.
Yeah. Looking at this guy right over here, again, does look like there's some good buying coming off the low. I do like that, but the place to prove itself is above $16, so it's got a lot of work to do.
Yep.
This one was beat up so bad, man. So just oh god.
Terribly.
I mean, again, people have this like weird idea that when you dump all the way down, it's just like a refueling, and then it gets like a free ride back to its prior highs. Like people will show this chart over here, and they'll be like, guys, it's at $9.50 now. It's cheap. Okay, you just do this over here. That's a 1,700%. Do you hate money? Do you not want money? It's like, no, that's not what it implies. And you will notice through this market cycle, many altcoins, I'm not saying that this is going to happen to Neo. In fact, probably not going to happen to Neo, but many altcoins will die proverbially speaking. Obviously BitConnect still trades, right? And that literally has like governments after it. So you can imagine that, something like this will still be traded. But, you look at the stuff from the 2014, 2015 market cycle, it still exists, but it's so irrelevant that it's for all intents and purposes dead.
All right, rough stuff. The hard truth here with Crown's Crypto Cave, but that's good. Well, I think we can sort of move to a wrap up here, which is what would be, the one thing that you would want people who are just getting into the space. I feel like there's been a new influx of interest in the space. My guess is that it's coming from young people, college students, probably about that age, who have been following the story the whole time, but now realize that they actually have the chance to buy in, right? And they understand the future. They're philosophically with it. They simply could not even touch the prices that were being thrown around in late 2017. Now they have a chance. And so that's why I believe I've seen quite a bit of interest of sort of what seems like newbie interest in this space. And if you have any words for, I guess, what would be kind of newer people in the space, or people who are still having their optimistic caps on and wanting to take another ride on the magic internet money merry-go-round, what would you give as good advice?
So first things first, I want to start with something more positive, man. I do want to have a more positive message. So if you are newer to this, if you are newer to trading, I agree with you that cryptocurrency has a special way of attracting people who would not be ever interested in the stock market or anything like that. Understand that you are getting a world-class first degree masters upon masters education on market cycles right now. Everything that you've learned about this market cycle, everything that you've seen, it will happen again. And you know what? You will now have the emotional conditioning. And again, remember going back to our talk before about emotions and psychology, and understanding that that is what will set you apart, and that is what will make you special, and that will apply in the future as well. So if you survive, if you stay here, if you can move forwards off of whatever it might be, this will serve you phenomenally in the future. Now, to the other point, what I would say is be very careful with people in this space. There is no verification for anyone. That's why I go out of my way to show my own trades on my channel. I think I just showed a small position of mine on my streamer account. I've literally dedicated an account only to streaming. I just trade off there during streaming hours and sometimes in off hours as well. I started with 0.04 Bitcoin or something like that when Bitcoin was around 10,000. So it was like 300 or 400 bucks, whatever it might be, and built that up to over 10 Bitcoins. That's just my way of showing verification and showing that it can be done. I'm not saying that that's the best way to do it. I'm sure there's people out there who would have better results, but if you are going to go through the annals of YouTube, look for people who can show proof. Look for that sort of thing. Doesn't have to be me. Doesn't have to be, I don't know who else is really on there. I don't really watch too many other people because there's so much noise in this space. I can say that Elliot over here has a great channel. He actually puts effort into providing real content and providing real information. If people are screaming moon at every $100 down, be careful. Be very careful. Most people here have, if there's a verification process, they would not be here. I'll put it that way.
Well, thank you very much. That was a great little wrap up. Obviously, guys, go check out Crown's Crypto Cave. He's got some amazing content on a daily basis. How often are you streaming these days? Twice a day still?
Every weekday, and I upload a standalone video during every morning.
So you got many hours of content coming out of Crown's Crypto Cave every day. So I really encourage you guys to check it out. Thank you so much for your time. Again, everybody, I'm sorry if there was a bearish sort of tilt to this, but that's kind of how the market's going right now. We want you guys to be informed. We want you guys to have the best chance at having success in this market. And so thank you so much, Crown. I really appreciate it. And we hope to have you back on FUD TV very soon.
Absolutely. Thank you very much, Elliot. And again, thank you to everyone watching this. So many people from the last video reached out to me. It was just really, really great community here to connect with. So thank you for that. Thank you, Elliot, for connecting us. And my God, man, again, pleasure to be here.
Yeah, awesome. Thanks again to our guest, Crown from Crown's Crypto Cave. The link to his channel, which you need to go follow if you don't follow it already, for daily trading tips and daily market movements, is linked in the description of this video. Thanks again. We're over an hour into this video, so if you're here, you are the real ones supporting this channel. You're amazing. I can't thank you enough for joining us today. I hope you enjoyed it. If you did, leave us a like, smash up that like button, sit on the like button, rub your nose against the like button, do whatever you need to do. Just hit that thumbs up for us. And of course, leave a comment in the comment section below, letting us know, what did you think about this episode? Once again, I apologize if it was overly bearish seeming, but we're just trying to give you the best information we can about the space at any given moment. If you're not already subscribed to FUD TV, I encourage you to hit that sub button for more videos like this, sometimes a little bit more positive than this, but also just more videos. More is more. That's the expression, right? Anyway, I'm Elio Trades, you're watching FUD TV, and I'll see you very soon on the next episode.